Today we're going to cover the Nasdaq Intermediate Term Volume Momentum Oscillator. This was developed by Carl Swenlin over at Stock Charts, and it was intended to give a new perspective of volume similar to what's offered by the Intermediate Term Breadth Momentum Oscillator for breadth. So this is calculated by subtracting the Nasdaq declining volume from advancing volume, and then divide the result by the Nasdaq total volume, and then multiply that by 1,000 in order to work with whole numbers. So the rest of the calculations are identical to those of the McClellan oscillator, and let's go to the chart and see how it works in real time. So we've got the Nasdaq composite in black, the intermediate term volume oscillator in red and black, and the line of demarcation we're going to use is right here around -75. Here it worked. Here it was a hair early and worked great. Here it worked great. Here you got a short-term bounce and a rollover, so let's call that a fail. Worked short-term, failed intermediate term, worked long-term. But here it worked perfectly. Here it worked perfectly. Here it worked. You got your bounce and then a long-term move after intermediate term pain. So this one's mixed. Here, hair early, then a huge move. That was good. Here you got the big bounce. That was good. Here it worked for the bounce. Here it did not. You rolled over. So that was a fail. This one worked. This one worked. This one was too early, but then you got a big intermediate term move, so that's a fail, and this one worked. So this one works pretty well. Definitely worth keeping an eye on as it relates to the Nasdaq. One more for the arsenal to measure short and intermediate term moves.